Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very excited to welcome you all to yet another promising edition on the Extreme Speed Live Technical Analysis session. And today we have, in fact, we have good news today as we have been quite profitable across the assets on our watch list. And stay tuned in as we will be reviewing the current market structures today, reviewing our current positions as we strategically position ourselves for the next move. Before we go into the details, I would like us to run through our daily routine just to quickly confirm that we are all on the same page. So if you can see my screen and hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. So your highs will give me a positive feedback that we are good to go this morning. So I look forward to your feedback, please, and thank you very much as you do so. So I will be loading up my comment box right now, so I would like to see your feedbacks in the comment section. Thank you. Okay, so what do we have here? I can see a couple of comments here, but not that much as expected. So we have Carrie in the house. Good morning to you, Carrie. Thank you very much for that feedback right there. It's perfect. Oh, great. Thank you very much. I can see you there too, Dida T. Good morning to you, Dida. Trust you're doing very well and glad to have you around with us this morning. So I will take this couple of feedbacks as a positive remark. So on this note, I'm welcoming you once again to yet another promising edition on the Extreme Speed Live, your daily dose of financial insights and trading strategies. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we will be deliberating on the current market dynamics from a technical standpoint using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. Well, it has been a profitable week for us so far, phenomenally profitable week, as on all of the assets we have been monitoring, we have some profit to take home on this one. So this week we have been monitoring 4 financial assets, which includes the USOILSPOT, the USTech100, popularly known as the Nasdaq. We also have the GBPUSD, and finally my favorite asset, the XAUUSD, popularly known as the gold spot. And today we are going to be reviewing how well these assets have been doing and see how we can use the historical data we have on the chart to strategically position ourselves for the next move. And in fact, I have a well detailed analysis prepared for you guys today that we will be using to guide our trading decisions. So you don't want to miss out on this one. Stay tuned in and grab your favorite beverages and what have you to keep you company through the course of the session. Now, for those of you who are joining us for the first time, who at this moment are wondering what is it that we are doing here, well, let me quickly clarify this. As technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. So this session kickstarts 10 a.m. UTC, 11 a.m. West African time on a daily basis. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us here, the better you will become at comprehending our analytical approach, utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, and we have welcomed our newcomers, let's dive right into the business. So the first thing we always do on a daily basis is to keep tabs with the fundamental factors that will be influencing the market sentiments today. And of course, in order to do this, we usually check on the economic calendar, as these fundamental factors often manifest on the charts in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we have been monitoring this week, we have been focusing on economic features from both the United States and the United Kingdom. Now, on the economic calendar here, we've had a handful of events which, as one way or the other, influenced the sentiment in the market, giving some traction. And of course, throughout the course of the week, we were able to capitalize on the weakness of the US dollar, which of course has been nosediving since the beginning of the week. Yeah, on Tuesday, March 5, we had the BRC like-for-like data, which came in below expectation, and of course resulted into some retracement move on the GBPUSD. And we did emphasize that we are not going to be selling that asset, as any bearish momentum we see on that chart will be considered as a retracement move, and this is what has been happening on that asset. So we are going to be looking at that in a moment. Then we also look forward to the ISM Services PMI on Monday, which of course also came into below expectation and further supported the downtrend of the US dollar. Then yesterday, we were looking forward to some couple of events which was expected to impact the market tremendously, and one of which is from the United Kingdom, and that was the budget report. And remember, we were looking forward to the United Kingdom Chancellor Jeremy Hunt to present the spring budget, where he did acknowledge the challenges faced by the economy due to financial crisis, European war on energy crisis, and the pandemic. And he also went on to further forecast stronger economic growth for 2024 and 2025 compared to previous estimates. Then one of the key highlights of his presentation yesterday was the fact that that interest rates will stay high for an extended period of time to combat inflation in the United Kingdom, which is one highlight that buyers of the pound sterling will be holding on to as they prepare for today's trading session. So we are going to be looking at how we will be capitalizing on that one today. So stay tuned in so you don't miss out on that one. Then we also saw the Fed Chair's testification before the House of Congress yesterday, where one of the major highlights was the fact that inflation is still high, and he also reinforced expectation for a potential interest rate cut later in the year. And this, of course, has put a lot of pressure on the United States dollar, making a lot of its peers to take advantage of this situation. So today we are going to be looking forward to a couple of more events. We have the Fed Chair's testification, which will continue today, and it will end today. And this is going to be coming up in about 4 to 5 hours from now. Everyone in the market will be looking forward to the follow-up of what he will be saying today, to have insight into the monetary policy outlook and, of course, economic situation of the United States. Then I had to include some mid-tier economic features as well, which we're also going to be looking forward to. One of them is coming up in about 2 hours from now, and that is the Challenger job cuts coming in from the United States. Now, this is a monthly report that provides information on the number of announced corporate layoffs by industry and region. Now, it also serves as an indicator by investors to determine the strength of the labor market. So usually a high reading is seen as negative or bearish for the US dollar, while a low reading is considered as bullish for the dollar. Now, if we look at the previous data here for the month of January, it came in at 82,307,000, and we do not have a consensus yet on what economists are expecting, but we will be looking forward to what the actual data will be. Will it be below the previous month or above the previous month? And if we have below the previous month, then that will be a positive signal for the labor sector, which will in turn affect the US dollar positively. And if it's higher than the previous month, then we may likely see a further decline in the US dollar today. So I encourage us all to mark out the timing of this event so we can be on standby to capitalize on whatever move or whatever reaction the market makes at that time. Then another event we are looking out for is coming up in about 5 hours from now, and that is the initial jobless claims, which is released by the US Department of Labor, and it measures the number of people filing first-time claims for state unemployment insurance. Now, a larger than expected number on this one will indicate weakness in the US labor sector, which in turn will reflect negatively on the US dollar, and in fact a decreasing number should be taken as a positive signal for the US dollar. Now, if we look at the data for the month of February, it came in at 215,000, and we have economists projecting an unchanged situation where the data expected is pegged at 215,000 too for the month of March. So we will look forward to see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? Then later on today, we are going to be looking forward to another speech from Loretta J. Mester. She is the president and CEO of the Federal Reserve Bank of Cleveland branch, and she also she's also a member of the Federal Open Market Committee in the formulation of U.S. monetary policies. So what she's going to be saying today is going to be carrying a lot of weight as market participant. We'll be looking forward to what she has to say as we can gain some insight into the monetary policy outlook, the economic outlook, and of course potential future policy actions. So these are the events we will be looking forward to today, and as technical traders we do understand that the anticipation of this event as a way of influencing the behavioral pattern of market participants, which obviously will reflect on the chart as price action. So as usual, we are going to be scaling back into the chart to look out for patterns and structures that we will be using to understand how the market participants are thinking, and of course use that information to position ourselves for the next move. So stay tuned in as we run into the charts. So the first asset we will be taking on today is going to be the USOILSPOT as usual. And what an interesting situation we've had here so far this week. Remember, we've had roller coasters of sells, buys, and in the last 24 hours, we also bought before the current bearish momentum surfaced one more time. And so far this week on this asset, I can say that we have been profitable as we took advantage of some interesting positions, though we had a loss happen on Tuesday. But if we look at the accumulated effort, we will see that we are on the positive side of our portfolio on the USOILSPOT. Now, for the sake of educational purposes and for those who missed out on our earlier sessions, let's run through what really happened at the beginning of the week and what led to the decisions we made so far this week. So at the beginning of the week, we initially identified a range-bound trading activity where price action was confined within the $79.80 level and the $79.25 area to emphasize the prevailing uncertainty in the market at that particular point in time. And usually, whenever we have a range-bound trading activity like this, we exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, what happened during our live session on Monday was the fact that price action had already broken down the ascending trend line and the support line here at the $79.25 level to signal a bearish momentum for the week. And one of the things we agreed here during our live session on Monday was that we will be waiting for price action to come back, retest the structure in an attempt to join the downtrend continuation. So with a sell stop order below the $79.25 level, we capitalize on our first sell position, and remember, we acknowledge that we will be adding more sell position at the breakdown of the $78.50 level. And we saw here how the first position moved over 180 pips, while the second position moved over 100 plus pips, giving us over 280 pips. And at the end of the day, when we moved our stop losses accordingly, we were able to take in some reasonable amount of profit around the corridor of about 150 to 180 pips. So as of the first day of the week, we were already profitable on this asset. Now on Tuesday, we begin to notice how it has become difficult for sellers to continue the momentum, as we saw a barrier around the $77.70 level. And as you will see here, we saw on last week Wednesday how that area had become a strong buying niche in this market. As you will see, sellers were always finding it difficult to continue from that area. Now with the situation we had here, we decided that if since buyer pressure was happening around this area again, this could be a barrier that could negate the downtrend continuation we joined. So with that in mind, we decided to capitalize on the uptrend move by buying above the $78.50 level, which unfortunately for us did not do very well, as we saw price action spiral back to the downside, taking us out of that position in a loss. But overall, we were profitable considering what we made at the beginning of the week. Now, during our live session yesterday, we begin to see quite an interesting trading setup, as we saw how sellers were continuing to struggle around the $77.70 level. And as a result of this, we were looking at a potential reversal pattern that could break out of that descending trend line we identified at the beginning of the week. Of course, remember, this trend line here has been playing a major role in supporting that bearish momentum since the new week began. So as a result of this, we decided that if a breakout of this descending trend line happened, a retest of structure will be a beautiful opportunity to join the uptrend continuation. Now with a key level, okay, just a level, not a key level. So with a level around the $78.25 area, we decided that we will be joining an uptrend if price action ever breaks out of that structure. And look at what a beautiful confluence we had here, and with a buy stop order above that structure, we were able to capitalize on that uptrend move. And remember that we said we will be maximizing the potential of the bullish move by adding more positions at the breakout of the $78.50 level, which got triggered. We also saw the trigger of the $79.25 level, and of course we had the trigger of the $79.80 area. So the first three positions did very well, while the third position went into a loss. And if you look at what we had here, the first position ran into about 170 pips. We had the second position run into about 140 pips, while the third position was closed at break even if you moved your stop loss appropriately, and the third position went into a loss. So we were able to have some profit of roughly around 100 to 150 pips depending on where you moved your stop losses to on that one. So far this week, it has been quite a profitable start to the week. And for those of us who did capitalize on these opportunities, well done and kudos to you. So at this point, you shouldn't be in any position right now, as the bearish momentum that started yesterday must have taken you out of all the current buy position. So as we head into the New York session today, how do we intend to capitalize on the next move? Well, it's important for us to also take into consideration the fundamentals that have been driving the sentiment in the market. Yesterday, we got a report from the U.S. Energy Information Administration, which reported that the crude oil stock change for last week rose for the sixth consecutive week by 1.367 million barrels instead of the expected 2.116 million barrels. And remember, we talked about the API weekly crude oil stock data yesterday, which showed a smaller increase than predicted, with stockpile rising by 0.423 million barrels against the expected decrease of 2.6 million barrels from the previous 8.428 million barrels. So we have a situation here where we have a surge in stockpile, but my concern now is that the surge is not up to what was expected. And if we take this into consideration using our simple economics, you will see that it appears that there is some demand that is eating into the supply, which made the stockpile not rise as expected. And in this kind of situation, it is likely going to incite price climbing to the upside due to the increased demand as reflected from this figure. Now, the prices of crude oil also got a boost from a weaker US dollar following comments from the Federal Reserve Chair, where he hinted that the Federal Reserve is considering lowering borrowing costs at some point this year during his testimony before the House Financial Services Committee. Now, with what do we mean by the dollar? The crude oil is gaining a boost from the weaker US dollar. Well, when you know the crude oil is a US denominated asset, and the purchase of this asset is usually made in the US dollar. Now that the US dollar is weaker, countries using other currency asset to buy this commodity will find the commodity cheap enough, leveraging on the fact that the dollar is cheap. Now, due to this, they want to capitalize on this and stock their increase their stock, and this may likely increase the demand of oil, hereby pushing price to the upside. Then, considering these factors, there are other factors too which we also got to hear yesterday that is affecting the ascent of prices. We had the positive news from the Chinese economy, particularly the trade balance data, which added to the upward momentum in oil prices. China's trade balance for February exceeded expectations, reaching $125.16 billion, while the year-on-year imports and exports both saw increase of 3.5% and 7.1% respectively. That's quite an interesting news for buyers of the US oil spot. And why are we talking about this? Well, we all know how the China is considered to be the largest importer of crude oil in the world, and when the economy is doing very well, it is expected that the demand for oil will rise. Now, with this positive signal, positive news from the Chinese economy, market participants will be expecting, or let me say, it is expected that demand for oil will rise, hereby supporting a bullish outlook. So considering these factors and looking at things from a technical perspective, the market outlook still remains optimistic unless there is a significant signal that states otherwise. Now, looking at the structure here on the 1 hour time frame, I would really want to go into the daily time frame on this one, as all we need is right here on this chart. Now, to guide our trading decisions for this week, we are going to be laying emphasis on this descending trend line, which was broken yesterday, giving us that bullish opportunity we capitalized on. And from a technical standpoint, when price action breaks out of a trend line like this, we expect that some point in time price is likely going to come back to retest the trend line in an attempt to continue the uptrend. Now, with this idea in mind, I would still want to hold on to a bullish bias. So presently, it's appropriate that we have a buy stop order above the $78.50 level, the $78.25 area, where we shall be giving enough breathing space for price action to move around with a stop loss somewhere right around the descending trend line or below the $77.70 level, dovetailing to about 60 to 70 pips thereabouts, depending on where you placed your stop losses to. So at this juncture, I want to be looking out for a reversal setup. It could come in the form of a double bottom structure, a head and shoulder pattern, whichever case it may be. We mark out the neckline and then buy the breakout retest of the neckline to join the uptrend move. And if the situation continues like this, we have multiple entries like the $79.25 level, where we'll be looking forward to a successful breakout, the $79.80 level, and of course the $80.30 area to maximize the potential of this bullish move. So this is how we are going to be managing a bullish bias on this particular asset. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community. We always want to keep our options as open as possible, taking into consideration the potentials the sellers also have in this market. Now, what are the conditions that we like to see here that will make us feel comfortable selling this asset? Well, for me to sell, I would like to see price action drop back below this descending trend line, which interestingly lines up with that $77 area. So I would like to see something like a breakdown retest of that confluence before considering selling this asset. So it's a simple trading setup we have here on the US All Spot. So I would encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on the US All Spot. If you have any questions or you need some clarifications whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we go into the next asset on our watch list. So stay tuned in, and you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. Hello, buongiorno, good morning to you. Roy99, good morning and thank you for the compliments in the comment section. And Ankyo CB, good morning to you too. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, popularly known as the NASDAQ. And on this asset, we've made significant profit here, capitalizing on The first half of the week was more of a strong bearish momentum, which we of course capitalized on, and I think we had over 3 positions running on that one, scooping in close to about 500, 600 pips thereabout, I can remember. For educational purposes and for the sake of those who missed out on our earlier sessions, let's run through what really happened at the beginning of the week. So right here on the 1 hour time frame at the beginning of the week, we did acknowledge that price action was range bound, where it was confined within the $18,340 level and the $18,290 area to emphasize the prevailing uncertainty in the market at that point in time. And with a range bound structure, you know how we do it. We will wait for price action to either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And during our live session on Monday, we were already seeing signals that the support line is likely going to be broken. So we were looking forward to selling at the breakdown of the structure. And look at what happened here a couple of hours into the New York session. We saw price break down the structure. And in fact, if you had missed out on that opportunity, the market was kind enough as it came back to retest structure multiple times before the strong bearish move happened. And since then, we have been selling this asset as we kept on adding more positions at the breakdown of levels such as the 18,125 area. And of course, we also added one more at the breakdown of the $18,000 area. And let's see how many pips we did capitalize on. Okay, the first sell position moved about 460 pips, while the second sell position moved over to 300 pips. The third one moved over 175 pips. So we were running with over 875 pips. And following the bullish pressure that began as soon as price tested the 17,825 area, of course, we moved our stop losses accordingly, and we were taken out with a significant amount of profit. So the first half of the week was quite profitable for us, and during our live session yesterday, we acknowledged an interesting trading setup evolving, where we were considering bullish opportunity at the breakout retest of the 18,100 area. And of course, we saw what happened right here during the New York session yesterday. Price came back to retest the structure, triggering our buy limit order, and we saw price climb to as far as the 18,125 level, where we saw price moved about 130 pips on that first position. And then the second position did not do very well, as we saw price drop back to the downside, taking us out of that move in a loss. Now, with the situation here, breaking down the structure and with selling pressure around this area, I actually sold here with the hopes that price will go, but it did not do well. Price came back to entry point and closed at break even. So now that we're going into the New York session on the USTech100, what is going to be our plans? How are we going to capitalize on the next move on this one? Now, before I share with you what I'm seeing here on the 1 hour time frame, let's run through the daily time frame to see how the week began for us on this asset. Now, on the daily time frame, the first thing we did observe here, after considering the nature of price action since the month of November of last year, we can see that price action has been bullish. And to further emphasize the strength of the buyers here, we had an ascending channel to work with, where we connected the series of higher lows, giving us the support line of the ascending channel, while the connection of the series of higher highs here gave us the resistance line of the ascending channel. And obviously, when price action is trading within an ascending channel, it makes a lot of sense that we look out for buying opportunities. However, something interesting happened during the end of last week's trading session, which made us to consider some retracement move or consider some profit taking activities. So we had our key level for the week at the $18,000 area just right here. And of course, you can see how that level had played a major role in guiding trading activities since the beginning of the month of February. We saw how it was a strong selling niche for a while. I think for about 3 weeks or so, every attempt by the buyers to break through was always met with strong resistance from the sellers, and not until last week's trading session that we witnessed the breakout of that structure. And from a technical standpoint, when price action breaks out of a key structure like this, we expect at some point it may come back to retest the structure that was broken in an attempt to continue the uptrend move, or even break down, retest to incite a sell-off to the downside. Now, with this understanding in mind, we zoomed in to see how market participants started the week, and we saw here that as soon as price tested that all-time high at the 18,340, we begin to see how it was difficult for buyers to continue that momentum as we saw selling pressure resume around that area, and this quickly triggered the idea of a potential retracement move to test the structure at the $18,000 area, or the support line of the ascending channel. So this was what triggered our sell position at the beginning of the week, and thank goodness we did capitalize on it, securing some significant amount of profit. Now, during our live session yesterday, we acknowledged that we are at a very important confluence where both the support line of the ascending channel and the $18,000 area is a crucial juncture at this point, where depending on how market participant reacts to this confluence will determine what our next line of action will be. And part of our plans for yesterday was to look out for either reversal patterns around this area to give us an opportunity to join the uptrend continuation, that is, prices respecting the support line of the ascending channel one more time. And remember, this ascending channel has been supported in the last 3 to 4 months. And the other scenario we were looking out for was the breakdown of that ascending trend line to incite a sell-off to the downside. So you would agree with me that we were at a crucial juncture where, depending on what happens here, will determine what our next line of action will be. So are we seeing a reversal pattern here, or a trend continuation pattern that will break down the support line of the ascending channel? So to have a better perspective into this, we scale back down into the 1 hour time frame, and you will see something interesting build up around this area. Now, as you will see, following the bearish impulsive leg that started this week, you will see that price action appears to be transitioning into what is looking like a reversal pattern in the form of a double bottom structure. Now, looking at this structure here, you will see the lowest point for this week is at the 17,825 level. And during the Asian session, we saw how it became difficult for sellers to continue the momentum to the downside, hereby giving us a higher low to work with. And when we see higher lows, it is expected that price wants to do a reversal. And whenever we identify a potential reversal setup, the next thing we want to be doing is to mark out the neckline, which interestingly shares a confluence with the 18,125 level. So at this point, we have a neckline to work with, where the breakout of the neckline here will be welcoming more buy positions for us. Personally, I did added another one at the $18,000 area, so I have a buy position triggered at this point, and then looking forward to a breakout of the 18,125 to add more buy positions to our existing trade. And if price continues to climb and find new highs, we have levels such as the 18,290 and the 18,340 to add more buy positions to our existing trade. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions. Then I'm also considering that if we could add more buy positions before that level, but it's okay. Let's just look at these 4 buy positions on this one. However, to guide our trading decisions and make things easier, let's connect the series of higher lows here so that we can have a structure at least to help us to feel comfortable in our buy position if in case any bearish momentum comes in. So I would like to thicken this one a little bit to emphasize its importance at this juncture. So I want this to only be on this chart. All right, so we have something like this. Let's do some little readjustments so that it can capture majority of the pivot lows. So we have something like this to work with. So this ascending trend line will continue to guide our trading decisions for today, and as long as price remains above the ascending trend line, we shall feel comfortable in a buy position. However, if price action goes ahead to break down that ascending trend line, which beautifully shares a confluence with the key level at the $18,000 area, then we shall be considering selling, where a further breakdown of the lowest point for this week at the 17,825 will be welcoming more selling opportunities. So you can see how crucial both the ascending trend line and the key level at the $18,000 level is. So we want to be marking out this level, and let's see how far this momentum is going to go. Now, for those of us who missed out on the breakout of the $18,000 area, let's see if the market can come back to retest. If it does, we look out for buying pressure here, then we can join that uptrend move. So this is how we are going to be managing our positions today on the USTech100. I hope you've marked out these levels accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So this is my simple view. If you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. Hello, Ross. Good morning to you, Ross. Ross 2000, good morning. Trust you're doing very, very well. Hello, Timmy06. Good morning. Glad to have you around with us. Beige says that which is best buy or sell. What are you talking about? Which asset are you talking about? USTech100 or the USOILSPOT? Let me know what you're talking about, and then so that we can all be on the same page there. Okay, so in the absence of no further questions, I want to assume that we're all on the same page. So in that regard, we shall be moving on to the next asset on our watch list. Stay tuned in. So the next asset on our watch list is the GBPUSD, and what an interesting situation we have here on this asset as the GBP pair continues its upward momentum, finally breaking out of that 1.27330 barrier we identified during our live session yesterday to maintain the bullish outlook in this market. And if you were with us since the beginning of the week, I did emphasize that I will not be selling the GBPUSD this week, even if we notice any bearish pressure, as the bearish pressure may be a retracement of the impulse leg we had. And you can see what has been going on since the beginning of the week. Heavy bearish pressure was considered to be a retracement move. So what really happened at the beginning of the week that led to the situation we have here? So you can see how we have been buying these assets since the breakout of the 1.267. So the first thing we noticed at the beginning of the week was this range bound trading activity where price was confined for the first 8 to 10 hours of the week between the 1.26670 level and the 1.26520 area. Now with this situation here, you know how we treat our range bound trading activities. We exercise patience and wait for either the breakdown of the support line, which never happened, for selling opportunities, and the breakout of the resistance line for buying opportunities. And with that in mind, we positioned ourselves above the resistance line here at the 1.2667 to capitalize on the uptrend move. Added more positions at the breakout of the 1.2670 area, added more at the breakout of the 1.268, and of course the fourth position did not do well as we saw price trigger our fourth position but went into a loss on that one. And with our stop losses moved accordingly on all of the assets, we were taken out with a reasonable 80 pips thereabouts, depending on where you moved your stop losses to. So the beginning of the week was a profitable one for us. And then on Tuesday, we saw price come back into this area between the 1.268 and our key level at the 1.267. And the appearance of buy pressure above our key level was a red flag for us that the bullish momentum might continue. So when we saw this happen on Tuesday, buy pressure around this area, and of course you know how we use our key level. Remember, our key level for this week was situated at the 1.267 area, and you know that whenever price action is trading above our key level, we want to be looking out for patterns and structures that support the idea of buying the asset. Now when we saw this happen above our key level and we compared how price had reacted to the structure in the past, especially at the beginning of the week, we saw buy pressure here. So we agreed that this area has a memory for buying power. And with this understanding in mind, we position ourselves right above the 1.268 to capitalize on the uptrend continuation. We added more position at the breakout of the 1.2685, then added more at the 1.267 as we rode that momentum all the way to the upside. So we were able to scoop in some significant amount of profit on this one before the bearish momentum came in. And during our live session yesterday, this was where we were. During our live session yesterday, price, we had this 1.2713 triggered, and we were looking out for more opportunities at the breakout of the 1.273, and I do hope you capitalized on it. We saw price move, tested the 1.27575, then retraced back into structure to continue the momentum to the upside. And at this moment, I have more positions added to this as I did identify new levels this morning at the 1.27440 level, and of course the looking forward to more opportunities at the highest level for this week at the 1.27575. Now the bullish idea we projected at the beginning of the week still remains very much intact. Remember, we have a couple of ascending trend lines here after connecting the series of higher lows. So we have this one, and then we have the second one right here. So we have a couple of them, and you know how we use our ascending trend lines. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying. So I still maintain a bullish bias here, considering the fundamental factors that is affecting the sentiment in the market. Yesterday during the Fed chair's testimony to the House lawmakers, he hinted at potential interest rate decrease this year, and he also emphasized the Fed is cautious about the approach, and they stated that they will closely monitor inflation before making any moves, which is an uncertain statement. I will not call that an hawkish remark. So it's still uncertain, and as a result of this, we can see how the pound sterling is taking advantage of this development. Now, yesterday in the United Kingdom, Chancellor Jeremy Hunt presented the spring budget, acknowledging the changes faced by the economy due to the financial crisis, pandemic, and European wars or energy crisis. Hunt also mentioned that interest rate will stay high to combat inflation. Additionally, he also forecasted a stronger economic growth for 2024 and 2025 compared to previous estimates. Now, these optimistic remarks and the narrative of higher interest rate in the United Kingdom may be the reason why the pound sterling have been finding positive traction, and I'm of the opinion that we may likely see more higher highs before the end of the week. So looking ahead today, market participants will be watching the US weekly initial jobless claims and trade balance data, along with the Fed Chair's second testimony and a speech by the Fed's Loretta Mester for more clues to give fresh impetus to this market. So I do hope we all marked out the timing of this event so that we can use it to also position ourselves in reaction to this event. So considering these factors, we'll keep an eye on the ascending trend line for our guidance today. So as long as price remains above this ascending trend line, we remain bullish on this market. Now, the only condition that will make us sell the GBPUSD is for these ascending trend lines to be broken to the downside. And if broken, I want to see a retest of structure to truly confirm that sellers are going to be making a statement before I can sell, because a breakdown here could turn out to be a false one. So we need it to be a true and valid breakdown before jumping into any sell position. So we will be looking at selling only at the hold on a second, at that 1.27330 area, which shares a confluence with that ascending trend line. So a breakdown retest will be all we need to join the bearish move to the downside. So let's mark that one out. Let's see how far this momentum is going to go. So this is my simple view on the GBPUSD for today. If you have any questions, feel free to let me know in the comment section. So as always, and due to the limited time I have now, I will take the next 5 seconds to see if there are any questions before we go ahead into the final asset for today. Stay tuned in. Hello, Roro Zoom. Good morning to you. And I see your comment here, Camera 12, who wants to know how it works here. All right, I guess you're new with us. I'm very glad to have you around with us. So we usually gather here every day. We come together as a community to review our current trading positions as everyone prepare for the New York session. So during the course of the session, which happens on a daily basis, we use our basic tools to strategically position ourselves for the next move. We manage our current positions and of course use the historical data we have on the chart to strategically position ourselves for the next move. I can understand that it might look a little bit complicated at first, but trust me, the more time you spend with us, the better you will become at comprehending our analytical approach and of course utilizing the information gathered here to enhance your own trading decisions and strategies. So I welcome you here, Camera 12, and hope to see more of you some other time. And if you have any questions, feel free to drop them in the comment section. All right, Beg, you're welcome. Lori House, how are you doing today? Good morning to you. So in the absence of no further questions, I want to move into the final asset on our watch list for today. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And the gold spot, I will say, is the most profitable asset on our watch list for this week, as we were able to scoop in close to 1,000, or not, if not even over 1,000 pips in profit on this particular asset, as we kept on buying and added more buy position as the market continued to give us more privileges. So at this juncture, the price of gold has continued its upward trend for the 7th consecutive day, reaching a new all-time high near the $2,161 area. The Federal Reserve Chairman yesterday, like I said earlier, during his recent congressional testimony, reinforced the expectations for a potential interest rate cut later this year. And this has, of course, put pressure on the US dollar, making gold more attractive to investors. Additionally, the ongoing tension in the Middle East is not helping matters at all. And of course, this kind of situation, always support and give more appeal for safe haven assets such as gold prices. However, there is a caveat into this whole bullish outlook for the US for the gold. Yesterday, the Minneapolis Fed president, that was Kashkari, during a speech, played down the speculations about aggressive policy easing, which, coupled with a slight increase in US Treasury bond yield, may likely limit the downside for the US dollar and prevent gold from rising further. And of course, we know how the US Treasury bond yield and the US dollar are directly proportional. So when the US Treasury bond yields gain momentum, the dollar also follows suit. And as it is here, the last time I checked, it appears that the US Treasury bond yield is trying to gain some traction, which will directly influence the price of the US dollar. It may be a retracement move, we never can tell, but we will acknowledge the fact that this move may likely influence an increase in value of the US dollar today, hereby limiting the uptrend continuation. As you will see, the precious metal, that is gold, remains in a highly overbought state if you look at things from an holistic perspective. So for the sake of educational purposes and the sake of those who are not part of our live sessions earlier on Monday, Tuesday, and Wednesday, let's run through what really happened at the beginning of the week. So at the beginning of the week, we had a simple trading setup after enjoying the bullish momentum that started last week, Friday. And we saw that the new week began with a consolidation where price was confined within the $2,086 level and the $2,080 area, which happens to be our key level for the week. Now, you know how we use our range-bound trading activity. Whenever we identify them on our chart, we exercise patience and wait for price to either break down the support line of that range to give us an opportunity to buy, or the breakout of the resistance line of that range to give us an opportunity to buy. So what really happened here was you saw that price didn't come close to the support line at all. Didn't spend too much time there, but instead we saw price break out. Hold on a second. Why is that doing like that? We saw price break out the resistance line of that range to trigger our first buy position. And remember, we kept on adding more buy positions at the breakout of structures like the 2088. So these ones here are my personal ones. The one we discussed here during the live session were these ones. So we added more at the 2120. And then during our live session yesterday, we had a beautiful trading setup. If you are with us yesterday, we identified a range-bound trading activity as market participant anticipates the Fed's chair testification before the House of Congress yesterday. and this range was a $4 range where we saw price action confined within the 2129 and the 2125 area. And one of the things we were looking out for yesterday was either the breakout or the breakdown of that range. And for the fact that price action was still sitting above the ascending trend line we projected, remember we had this ascending trend line marked out, and you know how we use our trend lines. As long as price remains above them, we will look out for patterns and structures that supports the idea of buying. So with that in mind, we decided to capitalize on the uptrend as we had our buy stop order above the 2129, and then we kept on adding more buy position as we had another buy stop order at the $2131.50 level, maximizing the potential of that bullish move. Then we had multiple levels again at the 2140, and since then you will see it has been a tremendous run into the highest point that price action has ever been on the gold price at the $2,161 area. And for those of us who capitalize on these opportunities, well done and kudos to you. And for those of you who still have your buy position running, personally I missed out on this run because I was taken out at the 2140 yesterday after that volatile movement. But if you still have your own buy position running at this juncture, it is appropriate that you move all your stop losses right now. Secure this current buy position as anything could happen today. And if you would ask me, I'm suggesting anywhere between the 2154 and the 2151, though it was upper before, but due to this choppy market condition, I had to increase the breathing space for price action to move around. So anywhere around here seems most appropriate to move all our stop losses to. And I also want to emphasize here that we are at an all-time high, and you know the psychological expectations around this kind of scenario. When price finds a new high, it usually takes some time for price to acclimatize to that zone. And this is always as a result of fear in the market, where those who had capitalized on the bullish momentum, as soon as price tested the all-time high, out of fear, they will want to close in some of their position with the fear that price may crash to the downside from that area. And while they are doing all of this, it usually reflects on the chart as a choppy market condition, consolidation phase, or even a retracement move. And if you look at this closely, in the last 1, 2, 3, 4, 5, 6, 7, 8 hours, you can see that the market condition has been very choppy, which further buttresses what I just explained now. And with this in mind, we may likely see some profit-taking activity happen, which could result into a retracement back into that ascending trend line that has been supporting this bullish momentum since the beginning of this week, to incite another uptrend move. And in fact, if it breaks it down, then this could incite a massive sell-off to the downside. And if we look at the distance between where price action is right now and that ascending trend line, we are looking at 150 pips thereabout, and which is something we would like to take advantage of. So if we really want to take advantage of this, if price action ever comes back, retraces, how do we do that? Okay, first of all, let's see if we can identify a reversal pattern around this area. And if we can do so, then we would like to mark out the neckline so that we can use it to position ourselves for the bearish move. So to do this, I would like to scale down into the 15 minutes time frame, and right here on the 15 minutes time frame, taking into consideration what has happened here in the last 24 hours, it is clear that the market has been bullish. So I would like to connect a series of higher lows here. So give me a moment, let me sort this out quickly. So we have let me let me reduce the thickness of this one. Then we have another one here. So we have a couple of ascending trend lines here to buttress the momentum since yesterday. Then in addition to this, okay, this one's here will only reveal on the 15 minutes time frame, right? Now bring back our line chart, and then we need a line right here. So we should be having somewhere around the 2154.50, somewhere around here. Okay. So 2154.50, you do want to be marking this level out on your chart right now. 2154.50. Okay. Now, what we are going to be doing now, you can see how let me zoom it in so that we can see things clearly. So you can see that since price action tested that all-time high, we have seen some series of lower highs, giving us a trend line to work with. So we have two situations that could happen from this structure. So we have a 2158.50 level, which also lines up with that area. So these are the two levels we are going to be using for today. Let me just make this a little bit neater. All right, so we have a range bound trading activity just right above that ascending trend line right now. So what we are going to be looking out for to join any bullish momentum is for price to break out of the $2,158.50 level, where price will have broken out of that descending trend line and remain above our ascending trend line to make us feel confident buying the XAUUSD. However, if profit taking activities will be what will happen today, then the breakdown of the $2,154.50 level will also have taken out this ascending trend line, welcoming selling opportunities for us. So we can sell at the breakdown retest of the $2,154.50 level to ride the momentum to the downside. Now, I usually emphasize this, but for the sake of those who are joining us for the first time, let me quickly state here how you want to be joining this move. So there are two ways to which we can capitalize on this bearish momentum. So if you are part of this profitable journey so far this week, then you can afford to just place a sell stop order below the 2,154, and of course have your stop losses right above the 2,158.50, dovetailing to about 40-45 pips depending on where your entry point is to join. And the reason why you can place a sell stop order is because you've profitable so far this week, and you can afford to leverage on the profit you had made so far to test waters around that area. If it works, all well and good. If it doesn't work, we know that we are only risking some of the profit we had made. But if you are new with us, you are yet to be profitable on the XAUUSD, and this is your first trade, that means you do not have anything to leverage on. So what you want to be doing is exercise patience and wait for price to come back, retest the structure before jumping into that sell position. So that is how we are going to be doing. The same thing also applies with buying at the breakout of the 2,158 level. So it's a simple trading setup we have on the XAUUSD for today, as our center of focus is simply between the $2,158.50 level and the $2,154.50 level. Just like yesterday's structure we identified, we have a $3 range to work with for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on the XAUUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section, and let's see how it will go. And you can also take that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. Thank you. All right, everyone. Okay, I can see comments from Abdul. Okay, lovely Janella. Good morning to you. I want to learn more about trading. Of course, try to be part of the XAUUSD Live Technical Analysis session on a daily basis. It officially kickstarts 10 a.m. UTC, 11 a.m. West African time on a daily basis. The more time you spend with us, the better you get to understand how our analytical approach works. Okay, so I look forward to seeing more of you. Lovely Janella. Panoyo 621, my friend, good morning to you. Glad to have you around with us this morning. Hello, Hollies. Good morning to you too. Jacob 4930 says US oil will pass $81 today. Yes, we will see. We don't know yet, but we'll see when it will. If it will or it will not. We already have our positions, our strategy in place to guide what we will be doing today. And I see your comment. 331177 says you need his money, blah blah blah. Okay. Well, I would advise you to contact the customer support team. Just go to the front page of this app, and on the top right hand corner of your screen you will see a head logo with an headgear on. Click on it and you will be taken directly to the contact center, and they will solve your problem in due time. All right, 33177. I hope that helps your plight. All right. Genomics, good morning to you. Glad to have you around with us this morning too. So I think in the absence of no further questions, we have come to the end of today's session, and it has been a wonderful moment for us all. So far this week has been tremendously profitable for us all, and I'm very excited to be part of this experience with you guys. So today we were able to take advantage. We are able to look at the 4 financial assets on our watch list for today, which includes the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD, where we were able to identify simple trading setup using our basic tools such as the trend lines, key levels, and chart patterns to understand the market structure, and of course manage our positions while we also strategically position ourselves for the next move. So I do hope we all marked out these levels and structures accordingly as we have said during the course of the session. If you had done so, well done and kudos to you. So all we just need to do now is exercise patience and allow these structures to mature. And always remember that every decision we make in the financial market is an educated guess. So due to this understanding, you want to ensure that you have a well-defined risk management strategy in place to mitigate against any risk on your portfolio. For those of you who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And if you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand how our analytical approach works, and eventually use it as a guide in making your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time prepare ourselves for tomorrow's trading session, which promises to be another exciting one, as we look forward to how market participants will be rounding off their trading activities ahead of the weekend. And of course, we know these activities comes with some significant traction, and we do want to be on standby to capitalize on them. So do not miss out on tomorrow's session, as I look forward to seeing you guys. So I wish you the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.